The entire world of digital assets has just been rocked by Ripple. An unexpected move with such massive ramifications is changing how analysts, institutions, and individual investors see the scarcity of cryptocurrencies. Ripple seems to be getting ready for something that nobody anticipated, according to an official filing that is already having an impact on the financial community. Half of the total supply of XRP is burned under control. Yes, you heard correctly. It's possible that half of all XRP may soon be removed from use. This detailed proposal, which aims to introduce a deflationary paradigm that could alter the market dynamics of one of the most talked about digital assets in history, is not a rumor or a whisper on social media. You must comprehend the significance of such a burn in order to appreciate the scope of what Ripple is purportedly contemplating. Crypto projects frequently employ token burns, a popular method of lowering the amount in circulation, to establish scarcity and boost long-term value. However, what Ripple is indicating is far from typical. We're discussing the removal of tens of billions of XRP, a sum so significant that the supply shock by itself might cause a ripple effect on all XRP-related trading pairs, exchanges, and liquidity pools across the globe. This type of occurrence would require a complete overhaul of all pricing models and assumptions regarding fair market value. According to reports, the official filing outlines a shift toward a deflationary framework, a purposeful change in design to guarantee that XRP's future value corresponds with its usefulness as a worldwide settlement currency. As described, the action highlights scarcity as a stabilizing factor for institutional partners as well as retail holders. The leadership of Ripple has long argued that XRP's future is determined by its usefulness rather than its potential. However, this new model proposes an idea that disciplined supply control, when combined with true utility, flourishes. In addition to lessening inflationary pressure, Ripple would be rewriting the XRP ecosystem's DNA by burning half of the tokens. Consider the consequences of having the accessible quantity of a fixed asset. The idea is as old as economics itself. As supply declines, demand remains the same, or, as in this instance, may even increase, and the price must rise to achieve equilibrium. The total number of XRP tokens would drop from over 100 billion to just 50 billion if the reports are accurate. The market cap recalculations alone indicate that the price per coin will double, even before accounting for additional institutional demand. However, markets are always driven by psychological, emotional, and narrative factors rather than just mathematics. The dread of missing out starts as soon as the concept of scarcity takes hold, and everyone understands that there will never be too much XRP again. Exponential growth is made conceivable at that precise instant. The new base valuation under the decreased supply paradigm, according to some analysts, may be in the tens of thousands per token. Analysts have already started to update their predictions. Conservative estimates hover around $10,000, which may sound absurd at first, but not when considering institutional accumulation and sheer supply compression. Recall that XRP is more than simply a speculative coin. It represents the foundation of actual liquidity in actual economies, thanks to Ripple's collaborations with central banks, international payment processors, and multinational financial institutions. Tightening a spring under extreme pressure could result in an explosive release if its supply is reduced, while its functional demand is maintained. Now, consider the psychological effects on the cryptocurrency market as a whole. These halvings only lessen the issuance of fresh supply, but in the past, Bitcoin's halving events have led up bull runs that ripple through all digital assets. In contrast, the suggested burn by Ripple would destroy the current supply. That's the difference between, changing history and reducing future inflation. For the first time, a leading cryptocurrency asset will radically alter its entire supply in a single transaction, causing an irreversible shortage that would necessitate a worldwide revaluation. To be honest, though, the ramifications go far beyond speculation and price charts. Ripple itself may enter a new philosophical period as a result. The size of XRP's whole supply has long been cited by detractors as a negative, claiming that having so much in escrow diluted the market and limited its potential. By carrying out this burn, Ripple would be communicating to the world that transparency, control, and alignment of values are more important than the outdated complaints. It's a statement that, prior to deploying trillions through tokenized liquidity rails, XRP's future will be based on trust, stability, and scarcity, exactly the components that institutions need. Influencers are referring to the filing as the Great Reset of the crypto supply, and social media mood is rising as word spreads. Discussions among institutional desks indicate that funds are already getting ready for volatility surges, and major financial sites are starting to report on the phenomenon. Because if this burn continues, the reaction will happen in minutes rather than days or weeks. Algorithms for automated trading will react immediately to changes in supply metrics. Liquidity books will rebalance, price feeds will be updated, and the global price may re-anchor in as little as 1 hour at levels no one has ventured to openly forecast. Imagine what would happen if the news woke up exchanges all around the world. Half of the supply vanishes from their ledgers overnight. As scarcity sets in, buy orders tumble upward, sell walls collapse, and market depth diminishes. Prior to the revaluation, retail investors scramble to lock down positions. Every social media stream overflows. Every significant cryptocurrency news source becomes live. The story becomes self-fulfilling when the headline reads, "Ripple burns half of XRP supply, price explodes." Holders are reluctant to sell as velocity decreases and liquidity tightens because they know that the value of each XRP that remains will increase exponentially. This potential burn is already being compared by economists to past monetary resets, such as fiat contractions and gold repegging events. But it takes place on a digital frontier with real-time transparency on a global scale. Assets that are seen as scarce typically fare better than everything else in a deflationary climate. XRP might set the standard for all other blockchain projects that aspire to long-term viability. If it becomes the first significant cryptocurrency to execute such a drastic burn under a controlled framework. This is where the calculus becomes, well, very amazing. The price of XRP would nearly treble if the market just kept its current valuation and the whole supply were cut in half. However, as you are aware, markets are not linear. Price action may become parabolic due to speculative demand sparked by a fall in supply of this size. Each fund reassesses allocation, and each holder recalculates the value of their portfolio. The story of XRP then changes from being a digital payment asset to the most effective deflationary settlement token in the world. The next wave of adoption may be driven only by that psychological makeover, not by hype, but rather by mathematical necessity. Let's now examine the domino effect. Ripple's on-ledger liquidity mechanisms gain strength after the burn. The nominal value of transaction fees, which are expressed in XRP, rises to encourage effective network usage. The quick increase in value of institutional partners' current holdings enhances their balance sheets and reaffirms their dedication to RippleNet infrastructure. As the once criticized escrow supply was finally rectified, retail investors' faith in the ecosystem's long-term stability was restored. The fire turns into a reputational incident in addition to a financial one, the ultimate eradication of the overstock myth that has plagued XRP ever since its launch. One conclusion keeps coming up as analysts continue to analyze the data. It's possible that the market misjudged the amount of influence Ripple still has on its own economy. The corporation has the ability to change the tokenomics that support billions of dollars in global liquidity with a single executive decision. And the consequences will literally reverberate throughout the whole crypto world if this idea moves from filing to execution. What comes next then? The countdown starts. All market makers, exchanges, and institutional partners will be keeping an eye on the formal release to confirm the burn timeline. One of the fastest and most significant repricings in the history of digital assets may occur if the filing goes as planned. Scarcity becomes a reality at that point, and new expert models suggest that the price may move closer to the $10,000 mark sooner than anyone anticipates. Many thanks for listening. Please remember to hit the subscribe button and give the video a thumbs up if you liked it. Additionally, to be the first to know when I post new stuff, make sure you enable the alerts. I can't wait to see you again in the next video. Be careful.